Welcome to the presentation, FinTech and Digital Banking, How to Seamlessly Steer Your Business to the New Normal. I'm Megan Billingsley with Industry Dive's Studio ID, and I'm excited to be your moderator for today's webinar. From accelerating the shift to digitization to the launch of thousands of new FinTech startups that offer the latest financial tools and technology, it's become more challenging than ever to stay relevant and visible. Every business had to pivot during the pandemic, and now as we enter the next phase, we're all being called upon to adapt again, not just with your offering, but with your messaging and brand. To that end, we've brought together a brand and business leader to discuss the behavioral and attitudinal trends that will drive sustained growth in 2021 and beyond. Today, we're asking the questions that are top of mind for everyone in the space as we head into the new normal, including, is digital-only banking here to stay, or do consumers crave a human relationship in banking? Has the gap between traditional banks and fintechs been closed? And how can brands maintain a competitive edge in this new world? Before we begin, I'd like to introduce you to our panel of speakers. Our first speaker is Luvleen Sidhu, the CEO and founder of BM Technologies, Inc. Once known as BankMobile, her company is among the largest digital banking platforms in the U.S., providing access to checking and savings accounts, personal loans, and credit cards. At the time of BM Technologies' listing, she was the youngest female founder and CEO to take a company public. In addition to her work on BM Technologies, Luvleen is the founder of the BankMobile Foundation, a member of the YPO, and a passionate mentor to young women and other entrepreneurs in the financial services space and beyond. We also have with us Sam Killip, Head of Client Expertise at Attest. Attest is the new standard for consumer research, fueling great decision-making through its survey platform and insights dashboard. It allows you to ask the right questions to the right audience at the right time. An experienced research leader, Sam has spent the past 7 years working in customer success for leading data-driven agencies before moving into the SaaS space to join Attest. In her time at Attest, Sam has contributed heavily to enhancing the CS offering and works closely with key clients. In addition to her marketing and research expertise, Sam is an experienced public speaker and regularly runs webinars and masterclasses on all things research and data. Welcome, everyone. We're happy to have you with us today. Before we dive into the presentation, I'd like to share a few housekeeping items. At the bottom of your screen are multiple application widgets you can use. All the widgets are resizable and movable, so feel free to move them around to get the most out of your desktop space. The slides will advance automatically throughout the presentation. To enlarge the slides, click the Enlarge Slides button located in the top right-hand corner of your presentation window. We encourage you to submit questions at any time throughout the presentation using the Q&A widget. Any questions we're unable to answer today will be answered later via email. Finally, following the presentation, you can access the on-demand recording of the webinar using the same link from today's live event. All right, let's get started. Our first question is, what has changed over the last 12 months for Americans that is impacting the digital banking and fintech industry?
Well, there's certainly been an increase in the pace of change over the last 6 to 12 months. And I know it's hard for marketers in this space to keep on top of the trends. We can see that people have new financial goals, new priorities, more responsible attitude to money, and they're receptive to brands that are going to help them achieve their goals. The pandemic has forced all our hands when it comes to digitalization across banking and payments. There's something known as the 2190 rule. Apparently it takes 21 days to make a habit and then 90 days to make it permanent. And the pandemic has forced new habits for all of us, all sorts of things, and in our attitude and behavior when it comes to banking is certainly one of them. It's really important to understand what is happening with trends, both specifically in banking and generally with consumers. The usual barriers to change of habit and level of comfort with tech, well, we've been forced to overcome those. In the US, which has more of a traditional infrastructure around banking, these new banking brands have challenged the status quo. There's kind of a mix in the US at the moment between the traditional in the past and then those that are leading the new ways. Let's have a look at some stats. Our data shows that a massive 87% of Americans who use financial apps have an online-only bank account, underlying that consumer appetite for breaking away from traditional providers. digitally savvy customers are also using apps to obtain credit, with 21% using solutions that let them pay in installments or get an advance on their salary. A further 21% are using a budgeting app. Compare that behaviour with a comparatively short time ago, and you can really see the pace of change.
Great, thank you. As a digital-only proposition, what change have you seen in your existing customers and in the uptake of your services within the last 12 months?
Sure, I'd be happy to take that one. And thank you again for having me, and really happy to be here. So, for uptake, the pandemic really accelerated digitization across the board, and digital banking is no different in that acceleration. Last year in our white label and new business portfolio, we saw over 600% year-over-year growth in our deposits. We saw over 250% year-over-year growth in spend. We opened close to 500,000 new accounts last year. And so it's very clear to us that, consumers are becoming more comfortable. They were forced to, take on digital means and continuing to create their banking experience and in a much more digital way. And because they were forced to, they've now adopted it, and it's become much more seamless and much more of a norm. And we've seen that our consumers are really resonating with the features, the functionalities, with our interest-bearing accounts, their no-fee to low-fee proposition, with our fee-free overdraft protection up to $50 a month, et cetera. And so we've definitely been able to benefit from the acceleration in digitization, and we've seen that with our own portfolio.
Great, thank you. Sam, what trends have you seen for U.S. consumers in the digital banking industry that brands need to be aware of?
Okay, so I've got 5 trends for you today, so sit tight. So number 1, the focus that I mentioned earlier, the focus on the desire to save money. The pandemic has put for us in sharp focus the need to put something aside for a rainy day. Let's all admit it, we've discovered that rainy days do exist. So that is really a major focus for 2021. And this represents a particular opportunity for FinTechs that put the power to save into their customers' hands via mobile apps. A massive 77% of US consumers who use financial apps say they want to save money this year, and 66% want to manage their money better. So in addition to that straight saving, there's also an appetite for financial products offering bigger returns. And the idea of investing is becoming much, much more mainstream. More than half of American finance app users are already gearing up to invest this year, showing that consumer perception about stocks and shares is really changing. Trend number 2, ramp up social media presence. So for FinTechs looking to grow brand awareness, engaging with customers on social media remains as important as ever. That's because people are spending much more time at home, working from home, and being unable to socialize in person has led to this massive increase in usage. Nearly 83% of US consumers say they're spending more time on social media than ever before. Facebook has seen the most growth in usage, and it's also the #1 platform respondents visit to interact with brands. Nearly 69% of US consumers say they engage with brands on Facebook. And while usage might ease off as the life returns to normal, hopefully, it's likely that consumers will have discovered new interests that keep them coming back to their favorite social media. It is worth thinking about, though, which social media is suitable for which demographic you're speaking to. Trend number 3, stay tuned in to the issues people care about. So the pandemic is not the only issue contributing to changing consumer attitudes and behaviour. Topics like racism, equality, poverty, climate change, they've all been high on the agenda, and consumers are still feeling very strongly about them. These brands that recognise the wider role their businesses play in the community and aim to drive the agenda on the issues they can win respect, and they win credibility. And this extends to the full ecosystem of partners that brands work with. So B2B providers need to be hyper-focused here too. Our research shows that in the US, 67% of people say they're interested in sustainability and poverty. Meanwhile, half of Americans say they're interested in the issues of racism, diversity and inclusion, and gender equality. Penultimate trend, commit to transparency to build trust. I know this is very important to Luvleen. As we see post-pandemic recovery, helping and supporting consumers with their finances will be key for fintech brands. And this includes promoting responsible borrowing. Our research shows that consumers welcome new regulations, particularly in the UK, including credit checks and greater transparency as to affordability. And we'll see these trends go over to the US, I should think. And then finally, keep in regular contact with your customers. While retail businesses are well versed in frequent customer communications, fintech brands often fail to maintain contact as regularly as they should. Perhaps they think they don't have anything to say or that people won't be interested, but really neither are true. Digital banks have a wealth of financial know-how that people want to know. So perhaps through different means, this is the way to start communicating. We know that American consumers are very open to receiving email communications from the brand they're interested in. In the US, 65% say they're happy to hear from brands at least once a week, and the younger demographic even more so receptive.
Great, thank you. Luvleen, how have you adjusted your business model in light of changing consumer trends?
It's business as usual for us. We are a digital strategy. And so for us, as we've seen the acceleration of digitization, as I said before, it's really about finally appreciating in a much greater way what we already did. That being said, I think, as a digital bank, it's becoming more and more expensive for neo-challenger banks to acquire customers. Anecdotally, I heard, and it's not confirmed, but one of the largest neo-banking challenger, banks out there, I heard, is spending $500 million to $1 billion in the coming year for customer acquisition. And so I think for those that are doing direct-to-consumer strategies, at some degree, there's a lift for all parties involved because of, the growing awareness of that category. But at the same time, the CACs are going to get absurdly high, and it's going to be hard to sort of compete. So, I'm very grateful for the business model that we've adapted, which is a B2B2C approach. Can we leverage existing brands that have entrenched customer bases and to be able to roll out fully branded digital banking products and services to their customers, to their employees? And we are able to acquire bank customers at much higher volumes and exponentially lower cost doing this, and at the same time provide great value to our partners. Because, especially companies that are really commoditized and are looking for differentiation, a more emotional connection, solving more pain points for the consumers. And if a transactional relationship exists between the consumer and the company already, interjecting, a bank account might even make that payment and transactional relationship more seamless. And so we enable, brands to do this. And today, we are able to have a customer acquisition cost for the bank accounts that we service to be less than $10. And in the US, at least, today, before we're spending more and more money in customer acquisition with some of these challenger banks that are VC funded, the customer acquisition for a bank account is typically $500 to $1,500. So I think that a lot of these challenger banks need to continue to think about how do you create a sustainable cost structure and to be able to acquire customers? And, we found a way to do it.
Great. And Sam, as things have become more digital, how can brands make consumers feel more valued and offer a personalized service?
Well, we know that customers certainly want a valued and personalized service. Some may even say a curated service. And we can see that many of the best known and successful digital banks in the US are offering features geared towards their target audience. Early access to deposit payroll, debt management, investing capabilities, so that each bank's customers is driving the services they offer. These banks are building the products around their consumers. And then we've heard before that customers want to be contacted by their bank, so quality, relevant content is an easy win.
Great, thank you. Luvleen, in the increasingly crowded space of digital banking, how are you continuing to stand out against the competition?
Sure. So one thing is that you need to continuously be innovative, and the product needs to be equal to, if not better, than what exists in the marketplace. So I think it's really important for us, as well as others in this space, to continuously think about what is the consumer pain point not being met today, and how can we enhance the product, the feature experience to really react to that need. And so not only are we doing that, but we're also thinking about how do we create a full digital banking platform? I think, several years ago when we first started out, 5-6 years ago, there was quite a bit of unbundling happening where fintechs were coming in and they were learning how to do one niche of the financial services experience really well and utilizing technology to create the most seamless experience, whether that was in wealth management, investing, in digital banking, et cetera. And now we're really seeing that the rebundling, or bringing it back together, where can we create one digital banking platform rather than our consumers having to go to various different players to meet those needs. And so we as a company are really focusing on how do you create a digital banking platform where your customers can come in and they can get access to digital banking, to lending, to advice, to investing, be involved in cryptocurrencies as well, using our platform. And so that is something that we're committed to, that we're continuously looking, do we want to build this or do we want to partner? So with technology, you've also been able to create an API-based ecosystem where we can partner with the best in breed fintechs in some of these ways to create this cohesive digital banking platform. And I think it's really important to create, much more of a rebundling of these services to stand out against the competition.
That rebundling certainly sounds like it would be more convenient as well. That's great. Sam, which are the digital-only banks winning today and why?
Well, I think digital banks are winning overall, as they're the ones challenging the very structured and restrictive banking structure in the US, as they don't need to worry about funding the needs of actual physical branches. They've got more funds to invest in risk assessment tools, brilliantly designed interfaces, chatbots that actually work, and of course, fraud detection. And I think there will be a real acceleration in the change of the channels in the US banking customers use for their banking. So those that offer a superlative mobile banking experience will be winners. As for the specific banks themselves, well, I know Luvleen is sitting here with me virtually, and she's far better placed to talk to you about BM than me. However, I do love how BM works with partners to access new bank customers, college campuses, mobile phone companies, to reach those first-time digital bank consumers and offer them transparent access to a whole suite of products. So clever. Obviously, Chime is a big player. And we saw that in our research, we found that 9% of US respondents named Chime when asked what digital banks came to mind. And I love the fact that Chime described themselves as more like a consumer software company than a bank, which immediately elevates themselves above other banks in our thinking of them. Their app is rated very highly, and they've got great automated savings tools. And as a digital bank, they, along with others, were able to get stimulus money into customers' hands faster than the more traditional banks, a real winner during this pandemic. Then there are those that look at the needs of the customers. So solution for customers able to get loans with no or poor credit scores, and those with personal financial management tools. We've heard earlier how we want banks to help us manage our money now, will all work very well. A good example is f.k.a. As a new bank that targets immigrants from ethnic minority backgrounds. It's designed for those who are new to the country and therefore have no credit or access to credit. And that's filling a real need. Finally, I think there are the banks that attract attention with great marketing initiatives. I love how Ally, which was rebranded from GMAC back in 2009, offered $250 in savings to all babies who were born on the last day of 2020. And I think that's $250 times however many, well spent. One warning, though, that I would say is that once a customer has entered that digital bank ecosystem, they're not wanting to move. So only 11% of those who currently use a digital bank account would consider moving again this year. So that's why accessing them at the start, like BM, is such a good idea.
All right, thank you, Sam. Luvleen, what are some of the developments upcoming in your student banking proposition?
Yeah, I think in general, we look holistically to make sure that our digital banking platform really meets the needs of the target audience that we're going after. Specifically for students, we have a checking account and a savings account that we offer today we have plans to roll out to students once they graduate and are non-enrolled to do a bigger push to credit products in the latter half of this year. So we have personal loans, student refinance, credit cards. And really, as we're beginning to offer this to our student base, we really want them to be able to understand the components of credit before they start, really getting access to credit. So there is a strong push towards education, helping them understand what is their credit score today and giving them access to that, and understanding, of course, the components that lead to good credit and build good credit over time. We're also looking at how do we do great partnerships with others to help support our students. So we're not only offering great financial services products to them and solving a lot of their financial pain points, but are providing value additive services above and beyond that. So for example, we have a partnership with Udemy for discounted classes for our students. We have a partnership with BillShark, which is a FinTech company that helps those review their bills and significantly reduce the cost of their bills. We have a partnership with Bartleby, with Barnes & Nobles, for discounted virtual tutoring and being able to buy textbooks, et cetera, at a discount. So really helping our students above and beyond just a financial services account. And lastly, we look at partnerships like what we've done with Google. So we partnered with Google in the summer of 2020. And we're working on launching a BankMobile Googleplex account, by January of next year. And this is great because it gives our students an option, to be able to potentially bank with a co-branded BankMobile Googleplex account. And we think that this may really resonate with our students. And why is, number one, Google and BankMobile have really been working together to get awesome front-end experience for our students that's really focused on financial insights and money management, even deeper, more robust than what we have today. And number two, the Google brand is helpful. So many of our students are part of the Google ecosystem already, and to be able to roll in banking, payments, financial services within that ecosystem will probably provide them with additional value. And the fact that the BankMobile Googleplex account, once it's rolled out, will be part of the broader Google Pay ecosystem. So that super app concept, where you don't just have the financial services products, but you are within a broader ecosystem that's allowing you to get cash back, discounts with merchants, pay on the go, order food ahead. And so we're really excited to be partnering with Google and hopefully launching that to our students as an option beginning in January.
Awesome. Thank you. And Sam, just to kind of dovetail off of Luvleen's response there, how do the needs of students and younger people differ?
Well, looking at our research, we can see that 18 to 25-year-olds differ compared to the general population in that they're more likely to want to save more money, more likely to want to manage money better, more likely to want to invest more money, and also more likely to pay for something big like a car compared with the rest of the population. They're also far more likely to have a digital banking app, budgeting app, loans credit app, use Venmo, etc. So this is a group that needs huge financial support as they're looking to do more with their finances in the coming 12 months. And they want to do this digitally. Therefore, brands need to create an accessible and congenial digital support system, or risk losing this next generation of customers to a brand that's going to do this better.
Great, thank you. Luvleen, I'm interested to hear from you. So BankMobile just became BM Technologies. So could you tell us about your rebrand and the future of the business?
Sure. So we actually changed from BankMobile to BM Technologies when we went public at the beginning of this year. And we are now a FinTech company first that obviously offers digital banking platforms to our partners. But we are not a bank today. We now work with bank partners, and we used to be, a bank with a bank charter. And so we rebranded to really reflect that we're a technology company first that offers a digital banking platform. In terms of what it means for us, nothing's really changed. We came into existence because we believed that we could utilize technology to create a better banking experience for millions of Americans around affordability, transparency, more consumer-friendly products, and that's exactly what we're doing now as BM Technologies. And we're continuing to grow and expand on our existing strategy of B2B2C banking, or banking as a service, where we work with brands, as Sam said, to be able to help them offer completely branded banking services to their customers, to their employees, to their students. And we enable them to win. And at the same time, we found a way to really acquire customers at low cost and at high volume. So we are, determined and committed to really continuing to build our student business in the ways that we've talked to you already, and also by expanding our relationship with Google. We're really excited about continuing to expand our relationship with T-Mobile, where we've launched the T-Mobile Money checking account, which has seen exponential growth over the last year. And we're looking at how to expand that product in the coming years. And we've also most recently launched our workplace banking initiative, which is, now that we have our proprietary digital banking platform, can we create new ways for us to roll out banking products and services to those that need it most? And we find that HR departments and being able to leverage them across the country is a great way to offer financial wellness products through our banking services, financial education, financial coaching. And that is what we're doing through HR departments across the country. And we're really looking forward to building out that vertical.
Great. Thank you so much. Sam, from your perspective, what do FinTech and digital banking brands need to do to remain relevant in 2021 and beyond?
I think the speed of digitalization will continue to accelerate as consumers see the convenience and transparency it brings, and the concerns over security continue to recede. I know that I've mentioned some trends earlier in our chat, but I just want to summarize my top tips. So number one is continue to build on ease and convenience. There will be a slowing down of pandemic-forced signups. And so information marketing needs to focus on breaking down those misconceptions that still exist. Secondly, continue to understand customers. We know saving is a focus now, but as the situation shifts again, will you have to keep in touch with your customers to know what their priorities are? Well, yes, because will saving still be on people's minds when they can spend on the big things and spend on experiences again? We just have to wait and see. Number three, keep in contact and use social media, but make sure you use the right social media for your audience. Although Facebook is still the juggernaut of social medias when it comes to the general population, it isn't always the case with those younger age groups. And finally, I think that the US banks will come under more pressure from their European competitors. So UK-based Revolut launched in 2020, and although we can see from research they're not as recognized yet in the US as they are in Europe, I suspect that situation will change.
Great. Thank you so much. Luvleen, I'd love to ask, what advice would you give other FinTech or digital banking brands looking to do more in financial wellness?
Yeah, I think that, again, it always comes back to, what Sam is saying too, is, understanding what the consumer needs are. So really looking at identifying the target market that you're going after, understanding what is the pain point that you're trying to resolve, and then making sure that your products and services reflect that need. And then lastly, finding a distribution channel to really acquire those customers, because quite frankly, you can have the best product, but if you don't have a customer acquisition strategy to get people to use those products, it really doesn't matter. So I think for financial wellness, people are looking for, very affordable, banking experiences. And so being able to provide them, a checking account with low to no fees, no monthly minimums, overdraft protection, interest bearing, it's the simple things. It's the simple things. But the reality is that, these Americans, at least Americans, I know you guys are in London, are being charged $34 billion a year in just overdraft fees. So, by utilizing technology and bringing down our overall cost structure, we can get the simple things right. And continuing to enhance and, features such as 2-day pay advance, which we introduced this year as well, to give people access to their hard-earned money faster. It's, again, simple things like that. And so we're continuously looking at how do we create, financial wellness across the board through banking products by giving them access to lending products. We're also working with a partner to be able to launch a lending product that would be secured by the payroll coming in, through this financial wellness, workplace banking initiative that we are doing. So, yep, a lot on the horizon, and those are some examples of some things that I would advise.
Great. Well, that was a fantastic presentation. Thank you both so much. We do have some time for just a couple of questions here. So Sam, I'd love to start with you. What should digital banks focus on in 2021 to attract new customers?
I think that they need to focus on continuing to understand their potential customers. So we have a situation right now where we think we understand the trends, we think we know what customers are going to expect, but things shift very quickly. So I think it's really, really important to understand who your target customers are, and then you can just understand from them by doing research what they need from you. So that is what I think banks need to do. Don't be complacent with how things are now. You need to keep on top of understanding your customers.
Great, thank you. And I think we have time for one more question. So Luvleen, with a B2B2C model, how do you find the right partners to work with?
Yeah, it's a great question. So, for us, we look at, companies that have strong brands. And so there's an emotional connection already in place between the customers that they serve and that brand. We look for hopefully brands that have access to millions of customers, whether that's the 725 campuses that we do business with today, that 1 in every 3 college-bound students goes to one of those schools, or T-Mobile now with the Sprint acquisition, has access to about 120 million customers. And then obviously with the Google partnership, the Google ecosystem and the billions of, potential eyes and ears that you get through a partnership like that. So, for us, it's really about finding partners that have those strong brands and those entrenched customer bases. And then, as I said before, do some of these brands already have some sort of transactional relationship that's taking place, whether that's, a retailer, whether that's a wireless company, whether that is a video gaming company where there's, in-game transactions taking place, where, you interject that bank account, et cetera. It creates a more seamless payment mechanism, and you also get a bank account, through that process. Those would be examples of great sort of brand opportunities or partner opportunities for white label banking.
Perfect. Thank you. Well, that is all the time that we have. Thank you for joining today's webinar, and a big thanks to our speakers for such an informative conversation. If you'd like to learn more about Attest, you can visit askattest.com for more information. Have a great day, everyone.
Thank you.